What if I told you the richest person in the world might not actually have trillions of dollars sitting in a bank account? Sounds impossible, right? Millions of people believe Elon Musk's wealth means he owns endless piles of cash. But the truth is much more surprising. Today, we're uncovering how billionaire wealth really works, why most of it exists only on paper, and whether the world's biggest fortune is actually as real as it looks. When people hear that Elon Musk is worth hundreds of billions, or even imagine $1 trillion, they picture something like this: endless stacks of cash, giant vaults filled with gold, and unlimited money ready to spend. But that's not how billionaire wealth actually works. Most of Elon Musk's fortune isn't cash at all. Instead, it comes from owning shares in companies like Tesla and SpaceX. These shares represent ownership, not money sitting in a checking account. Their value depends on what investors believe those companies are worth. This is called paper wealth. Imagine you own a house. If its market price doubles, you become richer on paper, even if you never sell it. Company shares work the same way. As stock prices rise, the owner's net worth also rises. But why do these shares become so valuable? Because millions of investors believe the companies will earn even more in the future. Expectations, confidence, and market psychology all influence stock prices, not just today's profits. The opposite is also true. If investors lose confidence and stock prices fall, billions of dollars in paper wealth can disappear almost overnight. The owner hasn't spent any money, it's simply vanished because the market changed its opinion. Here's the biggest misconception. Owning shares doesn't mean you can instantly spend that amount like cash. Selling huge amounts of stock can lower the share price, attract taxes, and even shake investor confidence. That's why a billionaire's net worth is very different from the money they can actually spend today. You might be wondering, if Elon owns so many valuable shares, why doesn't he simply sell them? The answer is that selling a large amount of stock isn't as easy as it sounds. It can push the stock price down, reduce the value of the remaining shares, and create a huge tax bill. For many billionaires, selling is often the last option. Instead of selling, many wealthy people can borrow money using their company shares as collateral. Think of it like using a house to secure a mortgage. They receive cash from the bank while still keeping ownership of their investments. This idea is often described as buy,